Your guiding light in times of trouble, tumult, chaos, even the good times. Smash the like button. Somebody said, "Hey Mo, can we short the Browns?" If you could short the Browns, you would be a billionaire. That's all I have to say about that. All right, everybody, take it easy. Goodness gracious, guys! I look at this Alibaba. Okay, it's down 11% in 2 days. It's like your casual Tuesday. No earnings necessary for a Chinese stock. You guys forget, what did you forget about what happened the last month when it went over $200 and it dropped down to $138? Did you forget that? I mean, come on, relax. I'll do it. I'll talk about Baba, but geez, oh man, everybody's having a freaking cow here. You know what you were getting into? It's a 10-year play, 5-year play. All right, China's Alibaba warns of slowest revenue growth since debut. Ooh, that's a scary title. Why don't we go and actually look at the numbers? The Chinese Alibaba holding forecast annual revenue growth to grow at its slowest pace since 2014. Okay, that's terrifying. I mean, with last year being insanely good, people were just out and shopping like crazy with no supply chain issues. Everything's just peachy all over the world. I can't believe that their revenue is slowing. I just can't believe it. Guys, we're coming out of a freaking pandemic. What did you expect to happen? China's one of the worst places in the world for this. You knew this was going to happen. Everybody knew this was going to happen. And this incredible reaction to what analysts think. How many times have we talked about this? How many times have we gone through like these chip companies going and saying, "Oh, we're going to look at the next. We're going to have chip shortages through 2023." No, Sherlock. What do you think is going to happen? This is what happens when you have issues in the world. Revenue is always going to slow if you have issues. I mean, come on. U.S. listed shares of Alibaba expects fiscal year 2022 revenue to grow by 20 to 23%. Let's just go down here and just take a quick look. For the reported quarter, The e-commerce juggernaut reported growth rose 29%. Growth rose 29%. Its slowest rate, it still rose 29%. What are we doing here? Guys, this is times where you go and you take advantage of irrational fear. This is exactly that. I'm not telling you to go buy this stock, but this is a perfect example of irrational fear. When you actually start looking at numbers, is growth slowing? Yes. Is it going to stay slowed? No. It's temporary or transitory, as Jerome Powell says. So they already said they expect their fiscal year to grow by 20 to 23%. I don't know what is going on right now. My world is in chaos, just like everybody. I'm scratching my head just as much as everybody else. You go look at Tencent, you're going to have the same thing. So don't jump off a cliff. You're going to look at Baidu, it's going to be the same thing. You're going to look at any Chinese company you want to look at, it's going to be the same thing. You look at any company in the United States, except for like Amazon and Walmart, it's probably going to be the same thing. So just chill out before you go and jump off of a cliff into a pond filled with alligators when you can wake up in like 6 months and everything will be okay. Told you I was going to calm you down. All right, let's go to the next. Macy's. People are shopping again. Macy's shares rise in the department store. The department store beats earnings. So I don't really have anything to say about this except they've added 4.4 million new customers in the quarter. Their online shopping experience has grown 19% year over year. They're up 49% on a 2-year basis. The company's online business made up 33% of total sales and 10% since 2019. So that is incredible. Let's see. What else do we have? Oh my God, I've never seen so many capital letters here. This is crazy. I'm going to go buy Rivian. Amen to that. All right, next, let's do something else. Wow. Let's see, Starbucks. When did I told you this the other day when Amazon paired up with IBM. Amazon is pairing up with everybody. So far, it's been IBM. Now it's Starbucks. It was Rivian. Look at this. Starbucks has teamed up with Amazon to do the go to deliver store. What's this thing called? Starbucks. They're going to combine the Starbucks app with Amazon's Go Just Walk Out technology to create a touchless experience, which is pretty sweet. They're already doing that in their grocery stores and supermarkets. So let's see. So you're going to scan an in-store code in the Amazon shopping app. Then you're going to be able to put things in your cart or your shopping basket or whatever you're going to use. And then it's going to be able to just add and delete items from your app, depending on if you pick them up or put them down. It's pretty awesome. I guess you're going to also be able to buy like coffee and sushi, which is pretty dope. So that's that. All right, let's see what you guys are saying about this. Hype dorks. Yeah, the hype dorks. Mo's anger is transitory. I'm not angry. I'm frustrated. There's a difference. It's you know what? I'm not frustrated. This is what happens. We're all learning this together. It's just because I know you people that are commenting on this, you're smart people. But I want you to just put things into perspective. You're not like these hype dorks out there that are just getting giddy about Lucid. Somebody told me this today. I cannot confirm nor deny, but they said that they have the capacity of making 34,000 cars. So that's sick. Anyways, you just got to be. This is where emotion comes into it. This is where I don't worry about things. You have to be able to control emotion and look at things and say, okay, the market is pulling Alibaba back 11%, but their growth continued to grow 29%. Should I be worried? Now, growth slowed, yes. But did growth slow for a reason? Yes. We had a pandemic. We have crazy shutdowns. They have crazy debt over there. People are losing their jobs over there. Does it make sense that growth is slowing and people are buying less over in China? Yes. I haven't even digged into any numbers besides the Yahoo Finance article that I looked at. So it probably gets even better for me. All right. Okay. Mo is transitory. Maybe so. All right. Where were we next? Consumer spending. I'm just kind of bouncing all over the place today. Why consumers are still spending? I think it's a very simple answer. People have a buildup of income. People don't really care about debt anymore because it's kind of been putting into their minds. And their wages are increasing as inflation is increasing. So whether it's increasing at the same rate, it doesn't matter. They're looking at it saying, hey, even though prices are higher at the store, I have more money in my pocket, theoretically. And but maybe not more buying power, maybe just more money. But that is why wages are increasing. I need to zoom out here so you guys can see me dancing. Oh, by the way, my new studio is being built today, and it's big. It's a big room. It's a huge room. So that is going to be an awesome studio, which is going to happen. Okay, but no, what is it? So the V shape, but most of all it is. No, that's not what I wanted to talk about. Look at this. Dollar Tree, Dollar General, Five Below have seen a whopping 65% surge compared to 2019. Watch those stocks, guys. I'm telling you. What else do we have? I don't really want to talk about this. The problem is, if I start talking about a story and I'm bored of the story, I can only imagine how bored you're going to be of the story. Biogen, this is a throwback from the past, and I'm going to probably get the comment from the same guy that always comments, who has a picture of Jack Nicholson, the actor, not the golfer, in his profile. Shares of Biogen slipped Wednesday after advisory committee from European Medicines Agency gave a negative trend vote. So the Euro, I'm going to call him the FDA, is way more conservative than the American FDA. So they're not putting that drug through. The FDA in the United States shouldn't have put the drug through aducanumab back in June. The FDA threw that drug through, aducanumab, which was, if you want to read about it, go read about it. It's really not the best drug in the world. Should have never been passed. The FDA approval for Aduhelm sent Biogen shares up nearly 40% in a single day. And since then, the stock has fallen 34%. So that's what happens. What happened? Sugar Mama Cathie. Yeah, we'll get there. Let's talk about Ray Dalio first. Let's talk about somebody with half a brain before we talk about somebody with no brain. Billionaire Ray Dalio. Misery and turbulence is coming. So he writes a lot on LinkedIn. I don't have a LinkedIn anymore. I don't like that company. The king of hedge funds. So he runs the biggest hedge fund in the world, Bridgewater Associates. He said in a post, the United States is now spending a lot more money than it's earning and paying for it by printing money that is devalued. He wrote in a LinkedIn post adding that the country is currently on the wrong path. Thank you. History now shows that when individuals, organizations, countries, or empires spend more than they earn, misery and turbulence are ahead. Amen to that. Next. Okay, let's talk about old Cathie. So look at this lady. Why is there no love for evil? They don't understand DNA. Okay, here we go. So Ford and GM, the reason is that they don't have the DNA for the brave new world. Wood said that Ford and GM were born in the industrial age of industrial and gas-powered age. They said that they and said that they have to make one giant leap to transform their business. Okay, they don't need to transform it. They could do it in conjunction, but anyways. Investors have been keenly focused on the performance of Lucid Group and Rivian. Investors, yes, those are investors. People that YOLO are investors. For the record here, she is down. So this woman who buys every single thing on this bell, Tesla, hold on for dear life, disruption, weed, EVs, Roku, Arc, Bitcoin, Palantir, Spotify, Doge, anything that has to do with innovation. She buys all of that. She buys everything tech. She's more tech heavy than the NASDAQ is. And she's just killing it this year. She's down 6% so far in 2021. By comparison, the Dow Jones is up 17%. The S&P is up nearly 25%. And the tech heavy NASDAQ is up nearly 24%. And she's down 6%. Now that's what I call disruptive. The lady's an idiot. Next, the big three. Rivian, Lucid. Stock prices surge. This is funny that it's coming from Brian Sozzi actually wrote this article. It came from Matt Malley from Miller Tabak, whatever. Doesn't matter. They're basically saying that this craziness that we're seeing in Rivian and Lucid and every other disruptive stock out there hit the stock market, forming an unhealthy bubble. Shares at one point on Tuesday were more than double the IPO price for Rivian, which is just nuts. Lucid stock has surged 118% over the month. They now have a bigger market cap. They're up there with Ford and GM. This is just like 99 when Amazon stock got way, way, way ahead of itself. It's a great company and changed the world, but the stock had to come down. I'm not saying that we're going to the same problems next year that we had in 2000 with a major bear market, but this market is being run by liquidity and much less so than an economic growth or earnings. Not a good thing, guys. That's why I always tell you we got to look at materials. We got to look at imports. We got to look at all those things. We don't just look at tech and disruption. This liquidity is going to become less plentiful, and people need to prepare for how they are going to react when the market starts to come down at some point. It's inevitable, and I think it will come down at some point in the next 12 months. I don't know about that, but yeah. Double down on skills. Yeah. Skills is disruptive. Actually, I don't know what it is, but I assume that it's disruptive because old Cath got into it. All right, let's see what Alibaba is doing. It was down 7.04%. Oh my God, 8.2. Let's all say a prayer together. So the yields are pretty consistent. Alibaba reported this morning. JD reported this morning. Macy's crushed it. All right. Kohl's reported this morning. It's up 10%. That's wonderful. Guys, if you want to join the software and see that Alibaba's stock is worth like $600 to $700 to $800 to $1 billion a share and not $150 a share, and you shouldn't worry, come and join us over here. Let me pull out my pen in the meantime. You get 8 pillars portfolio where you get to look and screen stocks, retirement calculator, stock analyzer tool, 8 pillars portfolio. This is the 8 pillars. You can basically build your own ETF, exclusive content, which we put out multiple times a day. Here we go. And if you want to do so, oh, look at that. Somebody else bought one. $29 per month gets you that. $29 a month gets you access to everything that I just said. If you want to join the Bid and Ask Nation with me, you get to talk to me on a daily basis. You get my Employed Trader series, which is getting pretty active with all those swing trades and the addition of the SPY. You get Trading 101 series, which basically teaches you all the rules that you need. You get my monthly seminars. You get the Discord community of over 900 people. It is wonderful. If you want to join Paul's Super Shorts, $500 gets you that. One-on-one trading session with me. I will throw some more of those up there today. $750 gets you that. And at this point, we'll probably have to do it after Thanksgiving unless we can squeeze one in next Wednesday or something. But that'll be good. And if that's just talking trading, options, whatever you want to talk about, I'll talk about it with you. But I like to do trading because I like to get you guys going in the right direction. If you want to do a real estate deal with Paul, $10,000 for 4 hours of his time in Yaguchi. When will the new Tesla winner be picked? I am not sure. If Seth is in here, he can definitely tell you. I am just the pretty face with a half a brain that talks. What else do we have to say about this? Can you go into detail on the earnings call on Baba? Listen, I ain't listening to an earnings call. I'm sorry. That's not my thing. All right. Give me some stocks. We'll run through them, and we'll go from there. Baba, the last thing I want to do is listen to an earnings call where some CEO goes, yay, this is going to be wonderful, and this and that. I don't care. If you want to listen to the earnings call and summarize it for me, I will read your summary, but I have zero interest in doing an earnings call or an earnings report, especially on a company like Alibaba, which I think is incredibly undervalued. So Alibaba's going to open down here, 149.47, and everything's going to be all right. All right, next. Give me some stocks. Let's run through them. Why don't we look at Biogen? We haven't looked at that in a while. How about looking at ARC? You got it. Biogen. Here was that day. This is that day that we spiked up nearly 40% a day. That was approval day. And ever since then, it's just been a downward spiral, and they are actually below the price that they made that spike at, which is just unreal. So the drug was a joke, and it should have never been passed, but oh well. So keep a watch on it to swing back up. I probably have a value. I'm talking from a value perspective. I'm talking from a value perspective over here, probably $180 or less, if I last remember correctly. I checked out their pipeline pretty recently. By recently, I mean the last couple weeks. I like everything that they're doing. I just don't like. I don't think that this aducanumab for Alzheimer's is going to be a driver for their business at all, and it's actually going to be a hindrance for their business because of the news that they're going to just keep getting poor news over and over and over. Okay, ARC Innovation. the disruptive company that's down 6% this year because they only buy good stocks, right? Here was her purchase on Zillow. Let's buy it here and let's sell it here. Okay, Zillow went up a little bit. Let's buy it here and then we'll sell it down here. Okay, you go, Cathie. You just keep making disruption out there, baby. All right. So I don't like where we're converging here, and I don't like that we're falling here. I do think that if you get one movement below this low, what is that low? The low on this candlestick is intraday low 115.20. If you can get below 115.20, I do think that you can short this thing, and you will be a bad mamma jamma. All right. Verizon. Can you hear me now? Good. Are we holding? Okay, so we're holding some kind of support level. That's great. Man, wait, no, this is Visa. Verizon. That looks better. I was going to say that was a weird looking movement. Usually you don't see a gap down on Verizon. Okay, so I'm going to zoom out far. We're going to zoom out to look back to 2013 on Verizon. So 1, 2, basically 3, consolidation in here, nothing there. A little bit of consolidation. So they're pretty much at a very strong holding resistance, support level. So I don't really think this is going to fall much more. If it falls much more, it could be with the whole market. But I think this can probably spin back up. Let me tell you this, guys. This is a boring stock to trade. If you want to do anything with it, try to do something from a swing trading perspective and try to catch a trend that way. But we'll go from there. Next, can you reduce your can you reduce the size of your face? Yeah, I can reduce the size of my face. In my ideal world, I would get rid of this because I don't think it's necessary to see me. But people tell me they want to see me, so whatever. All right. Let's see here. So Zillow has here. This is perfect, guys. Zillow has came down to support, and it's fallen right to that support level. So this is why it's so important to zoom out. I'm looking back here at 2017, 2018. So what would I do here? I don't know. Man, I don't know. I think I would probably wait until... that's not a good idea either. If you drop below... What is this level? 54. If you drop below $55, I think you can short it. I would probably wait until that level gets there, though. I would probably wait until it confidently gets below that level just to do something. All right, CF, and then we'll do Roku because Roku is... Speaking of cowbells, I was watching Yellowstone last night, season 4. Show's legit. If you haven't seen it, it's on Paramount. Legit. I want to be a cowboy. All right, just kidding. That's too much work. All right, CF Industries. Just topping out here. It tried to break out to a new all-time high yesterday, and it didn't, and it fell right back down. So with CF Industries, you're getting some roll over here. You're getting some inconsistent volume here. You're getting a lot of buying, a lot of selling. So let's just see what happens. I would, if you're not in this, I would not get into this for the first time. If you are in this, I would suggest you start taking profits at some point. That's just my opinion. Let's do Square next. Square is another disruptive company, but they actually are disruptive, which is actually the first disruptive company that I actually think is disruptive that I've said all morning, I think. But right now, good looking swing trade. And I remember doing this yesterday or the day before. You got to just make sure you get through the 200. If you get through the 200, then I think you can run this up to the 100. And by the time you get through the 200 over here on the sweet spot, you're gonna be in the sweet spot. So that is that's the plan there, and I'm sticking to it. All right, never understood the Roku craze. I used Roku last night, and I was sitting there and I was controlling it, and I'm just like, how is this disruptive? It does the same thing as Chromecast. It does the same thing as Apple TV. It does the same thing as Amazon TV. Oh, but they're storing data. Oh, okay, disruptive. Sounds good. All right. Well, this is definitely disruptive. So they have broken through. Guys, this is a good-looking short. Now, if you... excuse me. If you start to short this, make sure you use stops. Make sure you use stops and make sure you pay very close attention to the volume. Yesterday was a big volume day. Yesterday could have been a very beautiful add to a short. If you get an engulfing candlestick like this today, do it again, but make sure you're using stops because this thing can switch back on you like a ton of bricks. Target. Haven't done that one in a while. They reported when? They reported when? They reported yesterday, and they reported good, which is no surprise there. Discount dealer, rock bottom prices. Well, not as rock bottom as Walmart, but oh, what happened here? Why'd they drop like this? Okay, whatever. Probably slowing growth. Ha! So if you can break out to a new all-time high, you can go for it. But in the meantime, I probably wouldn't even short this because it tried to break through its 25-day moving average. It's back up today. Now, if it breaks through the 100, then you can probably run it down to the 200. But aside from that, yeah, that's right. Okay, next. Marcus, no, I don't know what you guys are talking about. Netflix, more like, so they tried to break out to an all-time high, couldn't do it. We actually have a video coming out about Netflix, maybe this weekend, maybe next week. I don't really know. The numbers are shocking. I did not think that the numbers on this company were going to be what they were. I was totally shocked. So I don't know what to tell you here. I would wait for this to roll over and start to move down. Their growth over the next probably 5 to 10 years is not going to be the best in the whole wide world. All right. I saw a stock that I wanted to do. Oh, Nvidia. Never gotten so many notifications before 9:30 in the morning. Nvidia, back up there. Started from the bottom, now we're here. Nice. Congrats. If you were in this on earnings, good job. But I still think that this thing is going to come back down here. I'm telling you, I think this thing sooner than later, it's going to come back down below 230. So Teledoc. So I don't know if you've been to a hospital lately, but just ignore electronic medical records. Every hospital that I go to, they still use pieces of paper and write them down and put them in file cabinets. I'm being sarcastic, by the way. But this company, Teledoc, is revolutionizing the way that you do that. And now we're not going to have to use pen and paper anymore. And we're going to be able to use Teledoc and go to nursing homes. It's going to be wonderful. There's never been a company called Electronic Medical Records that have come up and done this before. So it is crazy. That's what I have to say about that. Sarcasm. Okay. But either way, Teledoc is disruptive. Well, it might not be disruptive after this fall because Cathie might have bought it up here and sold it down here. But either way, we'll just go with it. All right, here we go. Consolidation all through here. You're at a very strong support level. If you break down and drop below this level of 120.67, if you drop below 120.67, you can go ahead and short this thing. By that time, if it's below 120.67, you will be down here on your stochastic, on both stochastics. You'll probably be getting a lot of selling volume, and you will go from there. Omar, bye-bye. Put user in a timeout. Bye, Omar. Omar, you spam me, you get spammed. You can't spam the spammer. Qualcomm. Haven't done Qualcomm in a... Oh, no, I did Qualcomm yesterday. All right. Okay, Qualcomm. So 185. Guys, I'm still telling you, I still think that we should take profits up here. And the reason I'm saying that is this has been a crazy run since the beginning of November. You're telling me that this company should go from $134 to $185 in 17, 18 days? Come on. With the exception of this little pullback, this thing is going to pull back down here to 164 level. And if not, it's going to drop to 134, maybe into this 152 area. So this is not going to be long-lived. If you're in this thing, please take your profits. You're doing very well. Okay, what else do we have here? Bank of America, long time no talk. Actually, I talk about it every day. Okay, interesting. I'll go over it in the Employed Trader series. Baba, we already did. Coin, I don't have any interest. I don't have any data on it. Visa been getting slapped lately. They got beat up a little bit yesterday. And now what are we holding a support level? I would be remiss if I didn't check. Yeah, kind of. You notice that you had a little bit of consolidation here in 2020 before COVID. It's not the best. It's not the worst. If you get a drop below $200, go ahead and short that thing. I think that you will have a very nice short going on there. Okay, Jets, Jets, Jets. Look at that. I remember buying Jets right back in here. Crazy. ETF. This has such incredible volume for being an ETF. It's really something. But anyways, this fall has been. Why don't we go over here? I want to look and see on the line chart, just like I look on the other side. Wow. Okay, here you go, guys. Here's your crazy run, and it fell right back down, basically to that point. Okay, I don't know if you can draw this graphic on YouTube. Anyways, this W formation, this M formation, if it pulls back a little bit today, which it's doing and keeps going, it's going to come back down to this level of, what is this, $22 or something like that. So you do have something nice on there. Can I look at Berkshire A or Berkshire B? I'll look at Berkshire B just because it's the same thing as Berkshire A, but it's actually somewhat affordable. $280. All right, let's see. Let's pull up the candles. And it's just consolidating really hard right up here. That's all it's doing is bouncing between 270 and 295. And it's going to roll with the market. You see the stocks that are involved in it. It's going to roll with the market. That's it. I'm considering Momo after you did a vid. So this is going to probably do the same thing. I'm sure you're going to look at this on earnings on November 30th. I'm going to tell you right now, don't jump into a pond full of alligators if they miss their growth. It's going to be okay. So just it'll be all right. So let's say the uptrend I don't like because you're getting very, very narrow with these two lines. Over here, I would be skeptical to short it because you can't get through that 25-day moving average. Even when you came down here, you bounced it. So you want confidence that you get through the 25-day moving average and hopefully drop below the 100-day moving average. So what else do we have? Okay, Amr, do it one more time. You banned. All right. ATVI, we look at that every morning. PayPal is getting interesting. PayPal is certainly getting interesting. So they had that big fall. No big deal. The stock market is now open. I thought the trend was different here. I thought that the trend swooped up here last time I saw. I must be something different. So what we're doing is we're just consolidating in this area and not doing anything. So as soon as this thing starts going back up with a little bit more buying volume, and you need to probably hit average for a few days in a row, then you can go ahead and move up. And I know that you guys want to fill that gap. It will fill. I'm telling you, unless the market falls apart as a whole, it's going to fill. But just keep watching it. You're probably going to be more likely to get it from a swing trading perspective before you are a long-term perspective. I will do two more stocks, and we will go on from there. AT&T, will it stop? Why don't we say? So the problem with AT&T here, I'm going to zoom this all the way back. I'm going back to 2013 here. It hasn't touched this level since 2013. I don't know when the last time. Oh, let's just go to here. Let's just go look at the log in. If you want to email me, mo@everythingmoney.com. I don't know what you're going to tell me, but I'm open to accepting your email, mo@everythingmoney.com. Have fun. Let's see. Max chart. So in 90, when's the last time? What are they at? $24? Let's see the last time they were at $24. Okay, so 2003. Let's call it 2003, 2004. That's the last time they were at these levels. So I don't know, guys. All right, let's go one more. Cisco dropped big time. You got it. What am I going to tell you here? You already know what I'm going to tell you. Let it calm down. It's a reaction to earnings. Everything's okay. Let's see what their earnings did. They had good earnings per share, missed revenue by 0.65%. Sad. This is definitely warranted to be minus 8% this morning. Sarcasm. So this is just hovering right here, sitting at a resistance point just below the 200-day moving average. I'm sure this is going to get pulled back up tomorrow, if not today. Just let it calm down and go on from there. So, all right, guys, I'm out of here for today. I will see you This afternoon, 2 p.m., live stream, EM community only. The link will be in the Discord, and we'll go on from there. I will talk to you guys in a little bit. Have a great day.